Morning traders, it's the 24th of February, we're Signal Centre talking bull. I'm Joe, joined by the birthday boy Steve. Happy birthday, Steve.
Thank you very much. Yeah, another birthday.
Another one.
Yeah,
Congratulations for making it.
yeah, didn't think numbers got this. Didn't think numbers got this big, Joe. Yeah, but yeah, thank you very much.
You're looking well, mate. Looking well. Okay, let's crack on. Plenty to get through to finish off the week. A few headlines to run through. Then we'll take a look at how the charts are shaping up for the close on the weekly time frame. So, latest headlines. We can see that the US GDP inflation estimates have been revised higher. The second estimates for fourth quarter of 2022 GDP growth were revised slightly lower to 2.7% from a flash reading of 2.9%, with estimates of consumer spending growth revised down to 1.4% from 2.3%. There was, however, an upward revision in the GDP prices index to 3.9% from 3.5%, which helped maintain unease over underlying inflation trends. The jobless claims edged lower in the previous week. The initial jobless claims edged lower to 192,000 in the latest week from 195 previously, and below the consensus forecast of 200,000. We continue to see some geopolitical tension simmering at the moment. The Chinese economic hopes tended to be offset by the geopolitical concerns. The US stated that it would expand its troop presence in Taiwan in order to bolster a training program amid an increase of Chinese threat. And there's also a warning from NATO against any Chinese move to supply weapons to Russia. The dollar posted a 6-week high yesterday with support from a hawkish Fed and weaker equities. There was also a marginal retreat on Friday, but overall it's held a firm tone, up only by 0.07% as things stand. There's been some hawkish rhetoric from the Bank of England. The monetary policy member Mann stated it was too soon to say whether inflation risks posed by last year's surge in inflation had eased, and there was no evidence yet that the data had suggested a turning point. In this context, she considered that the central bank should continue to increase interest rates. In particular, she was concerned over sticky inflation expectations and that the risk that the economy would suffer the worst of both worlds with persistent high inflation and weaker activity. We saw the Bank of Japan nominee Ueda preach patience yesterday in a testimony to Parliament. The nominee stated that the central bank will need to move towards policy normalization if trend inflation increases, but the bank will need to find ways to maintain yield control if this is not the case. And we've got some inflation data today from the US. The latest PCE prices index will be released later, and a stronger than expected reading would reinforce concerns over more aggressive Fed policy stance. The consensus forecasts are for the core year-on-year rate to edge lower to 4.3% from 4.4%. Stronger than expected data would reinforce fears over more tightening. So plenty going on. Let's take a look at the chart, Steve, and see how things are shaping up for the day ahead as we look to round off this week.
Yep, lovely, Joe. I'll just share my screen and go through Bitcoin first. Just drawing a few lines on it, really, just getting an idea of where we are in this sort of like cycle. Well, if we look at the, I think this has been drawn on automatically. I don't think I did this one, or did I? Maybe I did. Maybe I should add the Elliott wave absolute to it and see if it's correct. Did I get it right? Oh no, that is some, you know, the computer drawing it for me. Yeah, so fifth and final wave potentially in this corrective rally from Bitcoin. We've stalled in front of the resistance at 25,400. Remember, if we do break there, I expect it to move up towards about the 29,000 level. But as you know, I'm very bearish on Bitcoin overall and think we are going to see a lot lower prices over the mid to long term. So yeah, but the Elliott wave lining up with my thoughts at the moment, stalling in front of here and looking for a correction. So we've seen 3 days of negative price action. Today hasn't been any better. Breaking down to the 4-hour chart, we can see this the resistance holding here and potential really for, if we do get a break of the low of the swing low in between these two heads or tops, then we'll have further. That comes in at 23,370. We'll have further downside, probably down to, well, to show you the measured move. The measured move would expect to be around 21,468, which lines up with support, which is sitting there nicely waiting below. So overall, price action stalling and looking for a reversal. But if you are getting short of this, stop has to be very tight above that 25,250 level. Looking at Ethereum, similar sort of price action, obviously. Again, Elliott wave, looking at fifth and final wave potentially, and the correction, maybe the A leg is in, looking for a B leg correction before a C leg should take us a little bit lower. We're trading just below the major resistance, 1730. That is key. It's been a big resistance, going all the way back to May 21. We've seen it multiple times acting as a pivot level. So yeah, while we remain below that 1730 level, I feel quite confident on the bearish story. Break above there will open up the upside, and targeting maybe a move towards the 2000 level. XRP, there's a downtrend line which we've got in place. We've all the way from September last year, and it's multiple touch points, as you can see, since the late part of January, and we've managed to break above that downward trending resistance line, but haven't been able to get much above it, and it's really sort of the momentum has really stalled on XRP. So we're in this sort of like triangle formation, and potentially looking for prices to be capped at these resistance levels, coming in around about 41 cents. Really, if we get a break below 36.30, then I'll expect further downside quite quickly. That's the crypto market covered. Just covering it off quickly, going to gold and oil. If there's any other commodities out there you want me to cover, let me know. On gold, the Elliott wave looking for this, basically thinks we're in the fourth leg correction, waiting for the fifth leg. Wouldn't sort of argue too much about that. We are in a bit of a dip at the moment. On the gun to head trader yesterday, I sold gold. It played out okay. So yeah, a little bit of bearishness creeping in, but overall the uptrend remains in place. The 100-day, 200-day moving averages are below will provide support. We've got a 38.2% fib retracement, which is just above where we're trading, 8 cents above where we're trading at 18.28. Further support coming in at 17.88, and also that's a measured move for the bearish flag that we picked up from between the 6th and the 10th of Feb. So overall, shorter term chart looking a little bit bearish. We can see the 4-hour chart under pressure, downward trending, same as the hourly chart, and really sort of prices need to recapture ground, I would say, above the 1847 level to stave off this current pullback. Looking at crude oil, had a bit of a reversal yesterday after the bearish move we've had since Monday the 13th. We bottomed out at 73.83 in WTI crude oil, and a really decent rally yesterday. Geopolitical tensions probably the main driver behind that. Yeah, we've extended the move higher again this morning. So the 4-hour chart, although it still remains slightly bearish from a trend perspective, has broken back above the resistance that was formed from the break lower. So above 75.30, managed to push up in the last 4-hour candle to 76.43. The major resistance probably highlighted on the daily chart that we've really got to consider. We've got resistance all the way up at 80.72. We're not going to see anything like that today, or the support down at 72.58. Doubt if we'll see that, but a nice correction, looking for maybe an extension today. So maybe a candidate for the gun to head, don't know. Brent crude oil has had the same sort of price action, obviously trading at a premium of about $6.50 to WTI crude oil, and we saw the reversal just like we did on the WTI side of things. Major support coming in at 79, major resistance 86.70. We're somewhere in the middle, so a bit no man's land. But and again, the 4-hour chart still in bearish territory, although the hourly has broken above and looking quite positive. So maybe a potential getting long on crude oil, as we said. Natural gas. Is it having that reversal? We keep talking about it. I don't think I've got the energy to go again on this. Really, I'd like to see a break of maybe around about the 270 level to sort of confirm this. But the formation looks good from a candlestick perspective. A nice reversal here and an extension higher this morning. Yeah, I might talk myself into that, but I won't. So let's go with let's see what the FX is doing, Joe.
Yeah, let's do that. Okay, let's take a look at dollar index then to start with. So as mentioned in the commentary, it was grinding higher yesterday. So posting a bit of a doji, but still above this major support now that we've got on the chart 103.62, and prices pushing higher again today. So combination of factors there. Obviously more hawkish chat around what the Federal Reserve are going to do. We've got inflation numbers due today. We've got the Japanese potentially talking about raising rates as well, and we've got these geopolitical tensions. So all of this seems to be driving the dollar higher, equity weakness as well. So still looking for this 38.2% fib level as the kind of short-term target. That's at 106.15, and we look set to potentially grind higher into that level in the short to medium term. So still looking pretty strong for the dollar at the minute. And of course, you'd expect that to be having a negative effect on euro US dollar. And we can see here the break below support at 106.48 has triggered further losses. Bit of a doji posted yesterday, but we're on the back foot again today, down by 0.1% as things stand. And again, that brings into focus this 38.2% fib level at 104.60. Take a look at cable. We can see weakness there as well. Again, more range bound price action here. Potential double top. Needs to get below this 118.42 level to confirm. No immediate signs of that, so it is only a potential pattern at this moment in time. And while we continue to range, I think we can expect more choppy sideways price action on cable for the time being. So nothing really happening there. Let's take a look at Aussie versus the US dollar. That is moving lower. We saw that hit the 38.2% fib level yesterday at 67.80, and we're pretty much at that level again today. If that begins to break down, then it brings into focus the 50% fib level of this entire up move here. So we've seen a major fail into these resistance zones here, spark some selling, and it looks as though we are remaining in corrective mode. Be interesting to see how that looks from a fib perspective. So we can see here this upward moved higher in 5 waves, topped out here on the 5th wave. Now we're in the process of completing an ABC correction. So quite a nice look at it from an Elliott wave perspective at the moment. What else should we look at? Let's take a look at some of the other dollar markets. Look at dollar yen. So that broke higher earlier in the week above this black line of resistance at 134.65, and now that is now acting as support. So it was a previous resistance level. We broke above it on Tuesday. We haven't really moved impulsively higher following that break, but we can see that prices are holding above it for the time being. If we look at today's price action, we can see we had an attempt at moving lower early on in the session, but that's now been recovered and looks as though we're on the front foot. So the 38.2% fib level would be a natural kind of short-term target to go for. That's at 136.66. That's looking quite positive, and again reinforces the view that we think we might see some more dollar strength in the short term. Dollar Swiss, having broken out of this bearish channel, well, this wedge pattern, looks to be pushing to the upside. We saw a closing break above 92.90 on Wednesday. Prices continuing to move higher. Again, brings into focus this 38.2% fib level following this corrective move to the downside. So that's looking pretty decent as well. Let's look at dollar CAD. So that broke out of a small bottom pattern here and looks to be pushing higher. We've got targets up on the upside at 136.82, where we can see there's major levels of resistance from back here between December to early January. So that looks to be on the front foot as well. And again, suggesting dollar strength. I don't know if there's any other requests on currencies at the moment, but
no, they think that's boring, Joe. They want to talk about commodities.
Okay, fair enough. That's fine with me. If there are any requests, we can come back to them, but just cover the majors for now. Steve, you can give us a look at platinum.
Yeah, Mosh just saying thanks for your analysis yesterday on the Swiss yen. Glad he didn't take the trade. So I think you sort of like painted a slightly different picture to what you've seen. So it's always good to sort of have that backup. If Joe saw something or I saw something that looked good and you're thinking it looked good, then potentially you've got two people agreeing with it. So it's a better place to be. But it's always nice to have a contrarian view. I always like
Absolutely.
that. Platinum, we've seen 1, 2, 3, 4, 5, 6 weeks of negative price action since the start of the year. Week of Monday the 9th, we topped out at $1,103. We've seen this big old sell-off, almost at 10%. How much have we got there? 17.8%. It's larger than I thought. For a second, for a second I thought it was 1,000 to 900, but it wasn't. It's 11,000. So and this week we've seen a small stall in that sell-off. So it looks a little bit rosier, I would say. No matter what happens today, there's a potential for maybe evidence of sort of like long-term buyers coming in, because this is forming an inverted hammer as well on a weekly chart. Although we did take out last week's high, so that's the only note of caution, only by a few dollars. On the if we look at Elliott Wave, we can see we had this impulsive move higher, the more short-term chart on the daily, topped out at that 1100 mark, and now seeing a bit of an ABC correction lower. So this could extend a bit further. Also, this could be redrawn at some point if this ends up being the bottom. So I wouldn't sort of like look too deeply into it, but it's obviously good to see these things. Always use at least a couple of indicators, a couple of bits of analysis, rather than just one on its own. However, the B wave could potentially be here because we've seen this stalling on the candles on the daily chart as we go towards the end of the week. Doji candles are sort of like hovering above, nice sort of two-way price action, but a real stall and open up lower yesterday. So really looking at support and seeing if that can do a good job today. And we've already sort of like broken down below yesterday's low. So potentially on the 4-hour chart, the Ichimoku cloud doing a bit of a resistance job. We can see we stalled at this previous swing high and reversed nicely lower. So a little bit of momentum to the downside on platinum, and on the hourly chart, more importantly, if you're looking at this from a short-term perspective, then yeah, I would sort of be thinking that there is potential for a little bit further downside today. Really watching the $950 level as resistance, and if we do get back above there, then staying with the longs. But however, there's maybe interim support coming in at 934, but the major support probably down around about 920. Looking a bit negative on platinum on a short-term basis, and we're going through a nice correction on the longer-term basis, but still potentially bullish long-term.
Nice job, Steve. We've had a request to take a look at sterling yen, so I better do that before you then go on to take a look.
Was that your mum? Did your mum send that in?
No, that's from Ali, who requests this on a regular basis. So I'm guessing he's got a decent position in that at the moment, or certainly looking to get in. So the view on this one is still pretty bullish, because we can see, although we are trading in a downtrend in the sort of medium term on the daily chart, we do appear to have completed some sort of bottom pattern here. Prices were ranging for a significant period of time before eventually breaking out on Tuesday this week. Saw a decent impulsive move to the upside, taking out some resistance levels, and the pullback in price over the last couple of sessions, as expected, is holding these support zones. So we had these two black levels drawn on. They were 161.68 to 162.33, and I expected those levels to do a decent job of providing support, especially if this was going to play out on a technical basis. And if we look at today's price action, although we saw the overnight speech from the nominee for the BOJ, we also had some CPI data out from Japan as well. So a bit of an overshoot there, but at the moment it appears to be holding, and a pretty robust candle showing at the moment, so suggesting further sterling strength, which we are seeing across the board, which is encouraging, and some yen weakness. So providing this level holds 161.68 on a closing basis on the daily chart, I think there's potential there for further upside in the short term. I mean, we do obviously have to consider that we've got this downtrend in place, but if prices can bounce from this level, go on to retest these highs that we posted on Tuesday and eventually break them, then we will see this downtrend taken out and plenty of white space for this to potentially move into on the upside. So that could be a decent one to watch. And it does appear as though sterling's holding up quite nicely at the moment. Just going to bring up some fib levels to see if there's anything there to bring into focus. So actually, from this move from the highs here down to the lows, that yellow line is the 50% fib line, and we can see it pretty much tagged that to the tick. So that is always a pretty good indication from a technical perspective. If we look at the 61.8, that potentially is your short-term target if you're buying close to this support zone. So from a risk reward perspective, if you were to buy somewhere around here, targeting that 61.8, you want to have a reasonable stop loss to give yourself a bit of a chance of hanging on to this idea if there is any volatility. So I'm going below the low that we posted today, which is probably a little bit more speculative, but that's around 3-to-1 as a risk reward ratio. So that's pretty tasty.
I thought you jumped a gun to head already. I was like getting a bit panicky there.
No, but that's not doesn't look too bad, does it? That one.
No,
I mean,
it doesn't.
when it comes,
actually...
that's a daily chart. So obviously, when we do the intraday gun to the heads, I like to look more on an intraday basis.
Yeah.
Yeah, I need to see how that's shaping up on an intraday basis. Maybe I'll have a look, but you've got to do some indices first. So let's see. Maybe give me a bit more time to have a look through some stuff.
Oh, almost forgot about those, Joe. Excuse me. So yeah, indices. We've sort of FTSE's been running away with it. Obviously, we're still in this potentially a fifth and final wave before a correction, although we are seeing a little bit of a correction over the last week. However, the dips yesterday have found support around about this 78.75 level, and we've rallied higher, and nothing really going on this morning, really waiting for the markets to wake up and see where the next move is coming from. So still sort of like deciding whether we're going for extension higher or we're in the middle of that correction. On the 4-hour chart, the shorter term charts seem to think this correction is in play now, and I really like this sort of formation that is forming on this chart here. Almost looks like oh, let me just, I want a simple, yeah, there we go, parallel channels. There we go, parallel channels. Are we seeing evidence of a bearish flag here? Potentially. I mean, it's bouncing around, stalled at the Ichimoku cloud on the 4-hour chart, so I like that. Also, it's stalled at previous sort of like pivotal levels, which is the 79.50 level, and reversed lower. So yeah, further downside, obviously, or the measured move target, if this was to play out as a formation, we could see prices moving down to around about the 7800 level, which would be just a mild correction in the scope of everything that's going on. So wouldn't be too much of a surprise. Let's look at DAX. Again, look at the daily chart. It feels a bit toppy, but I keep selling it and trying to get stopped out. So I'm sort of giving up on this one. Having my fingers burnt too often, but potential for a treble top, maybe a quadruple top if we manage to get it. The real support level for me is around about 15,238. That would be the neckline. A break below there, and I'd be on it like a car bonnet, I think, because you'll have 1, 2, 3, 4 peaks, potentially a quadruple top, Joe. But obviously you have to wait for it to break to really get excited about it. So be watching that with my beady little eyes, but that won't probably happen till sometime next week. It feels like we're just hanging about at these heady heights until then. On the US or the other side of the pond, it hasn't been so rosy. We've seen prices break down and take out, and we're sort of like seeing a multi-week low posted yesterday. We got down to 32,788 on Dow before bouncing back. The 100-day moving average doing a little bit of work and supporting. It looks like we're in the fifth and final wave after a fourth wave correction, potentially targeting a move higher up, but it doesn't seem to like it really. Yeah, the US is struggling a bit to maintain this buoyancy. Nasdaq corrected, similar sort of price action, corrected lower, but the last couple of days have been quite positive and looking for this fifth and final wave. Also, support coming in around about 12,000. Nice round number. I like it. And resistance on the daily basis is at 12,230. We are basically below this double top formation neckline. So the 12,200 for me, if that acts as a bit of a barrier, which it has done so far today, potentially we will see this correction extend lower. Can't extend too far, otherwise it invalidates this Elliott wave. So really that's a 38.2% fib. Where's that been taken from? That's been taken from here. I can't actually see where that's been taken from. Let me see. It's not that one, so let's take that one out. Yeah, let's ignore that one. Let's really look at the closest one, the more shorter term, because we're looking at short-term price action. We'll probably find it's this one. Yeah, 38.2% fib. It was this one. It's a short-term one, so it was a level to watch. Support coming in at 12,047. So very key support between 1,200, 12,000 and 12,050. A break below there, go with the flow. However, if we can manage to get above 12,200 and close there, then looking pretty positive. S&P quite quickly broken, dipped down yesterday, got down to 39.70 before it rallied and closed around the 4,000 level, looking quite nice above there. I'd be quite positive above there, but again, we've got this double top formation, the necklines of 4,050, so a lot of work to do to get back on the horse. That's
Okay,
it.
nicely done. Right, gun to the heads. Let's take a look. So this is where Steve and I pick trade ideas live on the video as if we had a gun to our head. So we are trading these ideas with a real account. We put £2,000 in a trading account at the start of 2023, and it hasn't been great so far, if we're totally honest. We've struggled a bit, and probably just, tells you what markets are like at the minute. Pretty choppy, pretty sideways, and it's been quite difficult to spot opportunities, certainly at the time that we do them every day, which is around 8:30. Now, the ideas that we come up with must have risk rewards of 2 to 1 or better. They've obviously got stops and targets. Risk management, of course, super important. These trade ideas are closed out at 9 p.m. or unless the stops or targets are reached in the meantime, then of course they get stopped out before. But we publish these to our TradingView profile, so if anybody wants to check them out, you can do so. The idea of this really is just to try and showcase some technical know-how and skill, without too much work going on behind the scenes. We're sort of just picking something that we like right now, effectively. So we can find out how yesterday's trades went by going to our profile signal_center. We can see Steve was looking for a short-term double top on gold. Got off to a pretty decent start with that. If we click the play button, we can see that at the close, he was nicely on side. 0.7R secured for you yesterday, Steve. So well done.
Needed that, mate.
Did indeed. I was looking at a short-term top on Euro Yen. All looked to be lining up really nicely. Got a pretty decent move initially, but then got stopped out horribly, really, on that spike to the upside before it then moved down lower. So kind of right on the direction, wrong on the positioning of the stops. That's often what can happen. I was looking for an intraday setup, which meant that my stop had to be reasonably tight in order to give me a decent reward potential. So no good on that front. Stopped out. All in all, we were down around 0.29R on the session as a result of Steve's win and my loss. So kind of balanced each other out. Steve, we're really reloading the gun and we're going again today. So we're all hoping for a birthday special from you.
I think you might get it, Joe.
What can you deliver?
I'm feeling pretty confident after yesterday's win. I mean, there was a lot of losses before that, so I'm not getting too carried away. I know when I'm going to get slapped is when you're so confident. But weekly chart on Euro Stoxx 50. Now, the reason I'm looking at this is because it's hard to get a trade on with a smaller account size in DAX. But Euro Stoxx 50 tracks DAX very closely indeed. So this is a perfect one for a smaller account if you sort of like want to take a position in an indice market. So it's a good and it's a little bit steadier sometimes as well than the DAX. Although you've got the algos which are keeping them pretty in tune and connected. Are we logged on to our and a live account? Yes, keep getting logged out there, Joe. So let me just line this up and paint the picture. So weekly candle, hanging man candle after an extended move higher. Are we coming to the end? The daily chart telling me we are. Daily chart saying fifth and final wave complete, looking for this ABC correction. potentially. The ABC correction looks like a move down towards the 4,000, anywhere between sort of like 39.70 and 4,100. So yeah, that doesn't look too bad. We had a nice rally yesterday, and we've sort of like matched the high today. So shorter term chart, what's it telling us? I like the Ichimoku cloud, you know that. And we have sort of like the candles over the 4-hour chart looking a bit toppy. Doji candle between 10 o'clock and 2 o'clock this morning, and the sell-off breaking into that cloud, but bouncing higher. So it is a little bit spiky. I'm looking for a reason to sell. You know me. The hourly chart, we are above the cloud, but we have sort of like seen a nice potential double top on that candle. So I just need to find something, clutching at straws maybe, to sort of like have a reason to sell. But why not? Why not go for it? That doesn't seem to be too bad of an idea, Joe. Let's take a look at this. Let's try and line the levels up. You know me, I should be looking really at the stop's a nice level, 4,289. Let's round it up. Oh no, I'll round it up to 88.9, 180 ticks to the downside. So I'm looking for about 400 ticks to the downside, sorry, 40 points to the downside for a 2.2 to 1. That doesn't look too bad to me, Joe. I'm going to go for that. I'm going to try and get it on the Oando account, see how it works. As you can see, I'm lining it up. We put our 1% in. It's close to 1% anyway. We know that. It can't be exact. 42.88.9 or 19, we'll say. And the downside, looking at a move towards 42.30. Is that right? 42.30, yeah. That's given us a slightly different risk reward because the price has actually moved. Let me see if I'm just doing that right. It's gone 1 unit again, Joe. You know me, it's sort of like I'm gutted. Can you do half units? Or I suppose you can, but it's...
What's going to be the risk?
Yeah. Oh, 1.1.
No, you can't do micro lots on Euro stocks.
Oh,
You've done it
let me
anyway.
do it. Yeah, done it anyway.
Okay.
Yeah, didn't think we could, but we did.
All right. Well, the plan obviously with these trade ideas is that we're risking 1% of capital per trade, so effectively 2% per day. And we feel that's a kind of sustainable way of managing our account from a risk perspective. And it means that when we have a good time in the markets, we should be risking more because our account will be growing. So it has the effect of compounding. And obviously when we're not going so well, it means that we're risking slightly less. So let's take a look at my idea today, shall we? I'm going to go with Euro Sterling. I've noticed that Sterling seems to be holding up pretty well at the minute. And we're seeing that across the board. So just looking at Euro Sterling here, so expecting maybe some Euro weakness, some Sterling strength. We can see on the daily chart that we saw a breakdown in price on this on Tuesday. And since then, prices are remaining below the newly formed resistance that I've got at 88.14. Looking at it from an intraday perspective, we can really sort of highlight that big drop that we saw on Tuesday. And in recent days or recent sessions, prices have been consolidating a bit here within a potential wedge or continuation pattern, maybe on this. Haven't actually looked at any of the Elliott waves or the volume control, volume point of control, see if there's anything here that marries up. So it suggests that most of the price action took place up here. You can actually see a bit of a short-term top here, head and shoulders, which then would have completed. So I'm really looking for a continuation here. From a wave count perspective, we're in an ABC correction. Also completed a small 5-wave pattern to the downside as well. Doesn't really give me a lot, if I'm honest. So I'm just going on the basis that I think this consolidation pattern is going to break to the downside. Over the last hour, between 7 and 8, we saw a pretty impulsive move lower. Attempted to recover some of that, but I'm going to go with this. So I'm going to sell it at market, Steve, which is 88.07 on my charts.
Yeah.
I'm going with a stop loss at 88.26, so only 19 ticks, which is above these highs that were posted over the last couple of days. And for a target, look at something quite reasonable. So we've got some previous supports in and around this level here. Let's just get it on with the horizontal level, 87.58. It's a previous swing low, so that's 2.5 as a risk reward ratio. 2.57 I've got, maybe a bit worse because it's just dropped a bit.
Yeah, what was your stop? 88.26.
Yeah.
And target
87.58.
2.3 to 1 about that. Does that
Yeah,
sound
that'll
right?
do. Get it on.
That'll do, donkey. Okay, there we are.
Okay, so Steve's put the trade on. We can see there that it's gone through. So as mentioned, our account balance is down from where we started, but we've been doing this for nearly 800 episodes. So, we know from a hypothetical perspective that these trade ideas do tend to work over the long term, providing we stick to the same rules, which is risking 1% of capital and looking for risk reward ratios of better than 2 to 1. So I think long-term average is around about sort of 42% as a win rate. So we kind of have a default expectation to lose on these trades, but we know that because we're always looking to gain more from our rewards than we are taking as a risk, that this should even itself out over the long run. We hope, anyway. Okay, so let's take a look at the day ahead. We've got just the US PCE prices index today, which is another inflation metric, so that will be well watched. That's at 1:30 UK time. There are obviously other bits and pieces going on, global tensions around what's happening with Taiwan and China potentially supplying arms to Russia. So there are a few bits going on that could dent sentiment in the markets. But yeah, I think that's ready for us to leave it there, Steve. We
Yeah,
can
nice
wrap
one.
up the week. Steve can get on with the rest of his day and enjoy his birthday, which I hope you're going to extend over the weekend as well.
You never know,
If you're
I just
allowed.
go with the flow, mate. Oh yeah, I'm definitely allowed.
Oh, okay.
When you get to that the ripe old age of 55, mate, even if you're not allowed, you don't really give a fuck.
Okay, that's a very good outlook to have.
I'm only joking.
Yeah, Tina's not watching, is she?
No, I hope not.
Be.
No, actually,
Yeah.
she might be. So, yeah, no, it's
yeah.
yeah. Can we end it
She's
live?
giving you till midnight tonight, and then we will never mention your birthday again until
Yeah,
next year.
exactly. Yeah.
All right, lovely.
Excellent.
All right, guys, have a fantastic day, everybody, and a fantastic weekend, and we'll catch you on Monday. All the best.
Lovely. Cheers all.